Tara here from Money Management International, a full-service nonprofit credit counseling organization. Here at MMI, we know the importance of creating business resilience through savings and protecting your small business with business insurance. As a business owner, having a business bank account is important. You want to ensure you're tracking your business finances separately from your personal finances. But what about a savings account? Have you found yourself wondering, do I need a business savings account? We'll go over some key reasons why you absolutely do. There are a variety of reasons why having a business savings account that you consistently contribute business funds to is very important. Just like your personal life can have emergencies, so can your business. Aim for a minimum of 3 to 6 months of accessible and liquid capital. This can help you get through your rough season without having to shut down your business. Instead of incurring debt, a business savings account is a great way to pay for future projects. As exciting as it is to make money from your business, the IRS wants their piece of the pie as well. So creating a business savings account can make tax season a little easier too. Talk to your accountant to determine how much you should be putting away for taxes. One of the best ways to grow your money is simply by having a business savings account because it can earn you interest on your money. As a business owner, you probably don't want to think about replacing your equipment, but the time will come and replacing equipment can be costly. Having funds set aside for this type of expense is a must. It's a way of reinvesting in your business, which is key for growth. And having a business savings account can increase your chances of getting a business loan because it shows you have the funds to pay back the loan. If you're not ready to have different savings accounts for specific reasons, that's okay. But at minimum, you should have a cash reserve. Cash reserves are important because they can help you protect your business by providing cash flow if unexpected expenses arise or revenue drops. Now let's take a look at some strategies to help you save on business taxes. The Tax Cuts and Jobs Act created the Qualified Business Income Deduction, also known as the 199A deduction. You might be able to deduct 20% from your qualifying business income if your business is a pass-through entity, a sole proprietorship, an S corporation, or a partnership, passing its income and deductions down to its shareholders, partners, or owners to report on their personal returns. Setting up and funding a retirement plan for yourself and/or your employees can save you money on taxes. Make sure it's a qualified plan so you can take advantage of those tax savings. It must be one that's recognized by the IRS to allow deferment of taxes on earnings until the earnings are withdrawn. These types of retirement accounts include IRAs and defined contribution plans such as 401ks or 403bs. Tax credits are the federal government's way of encouraging businesses and individuals to do things or not do things that affect the greater good. For example, you can take tax credits for hiring employees, implementing environmentally friendly initiatives, providing access to disabled employees and the public, and providing health coverage for employees. Most are part of the general business credit, which is extensive, so it's quite possible that you qualify under some of its terms. Check with your accountant. Businesses can take write-offs on business equipment, machinery, vehicles, and sometimes even real estate. These write-offs can sometimes be taken in the first year you own and use the equipment. The two most common types of this accelerated depreciation are Section 179 deductions and bonus depreciation. Section 179 deductions allow you to immediately deduct the cost of certain assets when you put them in service, whereas the bonus depreciation is an extra benefit for buying assets. Talk to your tax preparer to find out if you qualify for any of these deductions. You may be able to deduct the ordinary and necessary business-related expenses you have for travel, non-entertainment-related meals, gifts, and transportation. You can deduct all of your travel expenses of getting to and from your business destination if your trip is entirely for business. You can deduct the cost of meals if it's necessary for you to stop for substantial rest to properly perform your duties while traveling on business. There's a 50% limit on meals. You can deduct no more than $25 of the cost of business gifts you give directly or indirectly to each person during your tax year. Any item that could be considered a gift or as entertainment is generally considered entertainment and cannot be deducted. You must have records that prove the business purpose of the gift as well as the details of the amount spent. And you can deduct business transportation. These expenses include getting from one workplace to another when you're traveling within the city or general area that is your tax home, or going to a business meeting away from your regular workplace. Write off bad debts to reduce income. Examples of bad debts that were previously included in income are loans to clients, suppliers, distributors, and employees, credit sales to customers, or business loan guarantees. A business deducts its bad debts in full or in part from gross income when figuring its taxable income. To learn more about ways to save on taxes, visit the Internal Revenue Service at irs.gov. And consult a tax professional before making any decisions that can affect your business tax return or spending money for the sole purpose of saving on taxes. Make sure you select someone who can help you all year, not just at tax time. The IRS considers tax attorneys, certified public accountants, and enrolled agents as registered tax practitioners. If you prefer a tax attorney, look for one who specializes in business taxes. A general attorney may not have the current knowledge of business taxes to be able to give you the best advice. CPAs are known for performing tax, accounting, and financial services for businesses and individuals. However, not all specialize in taxation, and some specialize in more than one service. CPAs are licensed by the states, not the federal government. An enrolled agent is someone who has earned the privilege of representing taxpayers before the IRS by either passing a comprehensive test on individual and business tax returns or through experience as a former IRS employee. Enrolled agent status is the highest credential the IRS awards. They're federally authorized tax practitioners who may act on behalf of taxpayers when it comes to audits, appeals, and collections. An enrolled agent tax preparer goes through much more extensive training than that of a CPA. Search online to find one of these tax professionals in your area, and be sure to verify that they are licensed and check their reviews. To verify a tax attorney's license, visit americanbar.org to search for attorneys by state. To verify if a CPA is certified through their state, visit cpaverify.org to search by state. To find an enrolled agent, visit taxexperts.naea.org or call 1-800-424-4339 to access a 24/7 referral service. Once you find a tax professional, be prepared to ask some questions, such as, how are you paid? Commission, flat fee, or by the hour? What education, background, and training do you have in this field? What licenses and certifications do you hold? How long have you been a tax professional? How long has your company been in business? Do you have a list of references I can speak with? Now that we've talked about the importance of a business savings account and the different tax professionals, let's move on to types of insurance a small business may need. We'll start with liability insurance. As a small business owner, you may be legally responsible if another person gets hurt or if their property is damaged while at your business or because of something you did. Make sure your business is properly protected against risks. Commercial property insurance helps protect your owned or rented building, plus the tools and equipment you use to operate your business. It covers losses from many sources, such as fire, burglary, theft, wind, and lightning. For home-based business owners, this type of commercial insurance provides more coverage than homeowners insurance. You may have heard other names for this type of insurance, like commercial building insurance, business personal property insurance, commercial real estate insurance, and non-residential building insurance. Commercial auto insurance helps cover the costs of an auto accident while you or an employee uses a company-owned car. This coverage can help pay for property damage and medical expenses, even in the event of a fatal accident. Workers' compensation insurance gives employees medical, wage, and other financial benefits if they're injured or become ill on the job. This coverage is required in most states. Professional liability insurance helps cover you and your company if you make a mistake while providing service to a customer or client. This coverage is also known as errors and omissions insurance. Mistakes happen, and if your customer thinks a mistake in your professional services caused a financial loss, they can sue you. Product liability insurance helps protect your business from claims that a product you made or sold caused bodily injury or property damage to someone else's belongings. Business interruption insurance is coverage that replaces business income lost in a disaster, like a fire or other natural disaster. This is not sold as a separate policy, but is either added to a property casualty policy or included in a comprehensive package policy as an add-on or rider. Identity theft insurance provides liability coverage to businesses that suffer a data breach. It could also cover the cost of notifying and providing services to customers who are victims of identity theft. Many companies will offer up to $1 million in identity theft insurance to protect small business owners. Umbrella insurance extends your coverage to losses that exceed the limits of other policies. So how does umbrella insurance work? When you have a claim that exceeds the limits of your current policy, umbrella insurance can provide extra coverage to protect your business and assets from financial risk. Keep in mind that umbrella insurance can only be applied to a claim if two things happen. One, you already have the appropriate underlying liability policy, and two, the limits of that policy have been reached. As with most things, it pays to shop around. But beware of choosing the cheapest insurance or eliminating certain types of coverage just to save money. A bare bones policy may not protect you if you actually have to make a claim. And worse, many policies have co-insurance clauses that may lead to only a partial payment if the insurance company determines you were underinsured. Be sure you know what your insurance covers and ask your agent for clarification if you need it. When your policies come up for renewal, check out the competition and make sure you're still getting the best deal for your business. If possible, meet with an agent who specializes in insuring small businesses. You'll often save money by getting a business owner's policy that combines several types of business insurance into a single policy. Thank you for joining me today. I hope you found this information helpful. To learn more about this and other financial topics, or to schedule a counseling session, visit us online at moneymanagement.org or give us a call at 866-889-9347.